welcome to the upstreamlife.com. I'm your host and founder, Vishal Krishna. On the podcast today, I have Ram Yadav, who is the founder and CEO of Integrow Asset Management. By the way, Integrow is focused on transformation, okay, and real estate needs transformation. It's also focused on sustainable growth for the real estate industry through collaboration and transparency. So why are we doing this podcast? The last 12 years have been very difficult for the real estate industry. A lot of my friends have gone into bad debt. Some of them have closed down their businesses. So let me tell you some data. Okay? There is an opportunity in last mile project financing, which today is, by the way, very difficult to get. There are stressed assets which can be turned around, but capital availability is a challenge, like I said. And Integrow believes, that's where the market opportunity lies. Okay, the total value of stressed loans in the real estate sector currently stands at 2.5 trillion rupees. And this is data from Anarock, by the way. Most of you would have seen it in the news. And there's also 90,000 crore worth of loans, stressed loans, which have gone to court, which are stuck in court, and there is no resolution as yet. I hope that gets sorted out. By the way, Integrow has raised money from Aurum PropTech, and the funding there will be used for growth and expansion. And Ram will tell you more about that. Ram, how are you? It's so good to have you on this podcast. I love real estate. Real estate is a sunrise industry because it's about housing, it's about shopping, it's about the country's growth, actually, right? We are a consumer nation. But why is it so stressed, Ram?
First of all, hello to you. Everything that is great and very close to our hearts in daily lives, it takes time to get to become more and more organized. And I think if I have to answer that in one sentence, housing and real estate in India is on path of that organization. It's not even the sunrise, I would say. It's just the ecosystem which has started. As consumers in this country, we have become demanding over a period of time. And now, we are moving from that 1,000 to 1,500, having been here at $1,500 per capita income. This is that start from where the quality housing, the quality workspaces becomes the center stage of discussion. And that's where I see there is a massive opportunity in India. And it all had to be like this for us to come and correct certain things and transform it.
That's brilliantly said. You're basically saying that the last 20 years has just been about reasonable growth or unreasonable growth without any planning. And that's the reason, like any industry, I mean, if you look at the US also, before the Great Depression, housing sector became a bubble. It became a industry, sunrise industry. It went through a bubble and then it came up with strong standards.
Absolutely.
You're going through that space?
I think we are absolutely poised and we are in that space because the first big and I would say the bubble was formed because of very low supply and very low quality of supply, very unorganized players all across between 2000 to 2010. And from there on, I mean, if you see, we have just got a regulator in form of RERA since 2015-16, right? And there are a lot of states which are still going through that process of getting RERA right. And that's why I said it's just the tip at which we are currently.
Okay. Now I want to talk to you about Integrow. What do you do? Why do you see these changes, these social changes that are happening, or these stressed assets that we talked about? How will they become an opportunity for Integrow? Can you tell us a little bit about Integrow, please?
So, the whole idea of Integrow has started from the perspective of creating an integration of services, technology, and capital. And that's where, I always say that in an industry, if you are looking at disrupting and also at the same time of taking the advantage of organization and reorganization, which we put together called as transformation, you need a very long play. As of now in real estate, either you looked at as construction and completion, or you looked at as some part of technology. We are not even at the tip of the iceberg. And then capital has been since 2000, banks started funding real estate somewhere in the late 2003-4. By 2012 and 13, the banks were replaced with the massive NPA crisis by NBFCs. And in 2018, through the crisis of NBFCs, now we find ourselves in a place that now there is a realization that asset liability management in something as peculiar as real estate, where not only the characteristic of how capital is utilized, because capital also was getting funded by the buyers largely. And now since last couple of years, the ratio of capital coming upfront from the buyers has gone down considerably, and that's where we see the opportunity for alternatives emerging. And that's where, to answer why Integrow and why this whole strategic investment from PropTech, what we call in our language is the PropTech is involved in three areas of business. First being the real estate as service, which is where we are trying to address the modern need of real estate in a very different format, right from co-living to senior living, and creating a operating service apparatus. And that's where we are investing. We call it as RAS, which is real estate as a service. The second one is we call it as a SaaS, which is software as a service, where we are investing considerable amount of effort and capital in creating the modern technologies which are used as service. So that's the second part. And third one we call is a cash, which is where Integrow is placed, which is capital as a service. So that's the overall layout, and that's why this 49% investment by PropTech is not just an investment, but it also opens the whole, platform of creating a play of integral part of the service, the technology, and the capital. And that's how Integrow started. So, you talked about the stress in the industry, which is largely attributed to the residential working capital mismatch. But I think from our perspective, Integrow is not only about, the current opportunity of, investing in the stress asset. Yes, it is a very, very, lucrative opportunity to start with, and we are placed at that point where we are there to take advantage of this. But I think Integrow you can largely divide as four different businesses that we want to be, but only focused on real estate. So we are trying to build a real estate focused true blue India's entry in a large institutional play of investment management firm, which will be investing across, which would mean residential, largely working capital, and completion, which means commercial, where there is a massive gap which is left from the top 3 4 large international players who play at that 100 million and upwards grade A commercial office space. That leaves a massive space for us, and domestically that's one space where not many people have been there. The third is what I call is the alternates in real estate itself, which is where co-living, senior living, education, healthcare, that entire, I mean, that's part of real estate. And the last one is then coming to the public investments, which is we are less than 1% of the total market capitalization in India as real estate industry listed space. And generally that ratio is about 10%. And that will state the state of real estate and the story that is yet to unveil. And that's where, Integro is trying to uh, base itself. And it's just the start for us.
No, that gives me an idea of what you're looking for, and that's really well laid out in terms of why technology plays a major role, why funding plays a major role. Let's start with this. Let's look at the commercial segment also, which we didn't talk about. We mostly spoke about the housing so far. Do you see that as an opportunity because the builders have cleaned up their balance sheets and there is a lot of office absorption? There is also an addition of, like you said, co-working, co-living that's going to take off. They need to be funded. From how do you use technology to benefit these people? And also, they're always looking for alternate types of capital. That's where you come in also. How do you combine technology and funding at the same time, Ram? How do you function?
Yeah, if you take a very simple example of the alternate living, co-living, I think uh, we just started and we were hit by COVID, and currently there are, 4 5 large players put together. They are still at, less than 150,000 beds. And I mean, if you look at the overall population of the STEM, which is the science, technology, engineering, and management, that itself will augment and would need at least about 1.5 to 2 million beds. And that's an emerging space. And I think that's where the consumer preference is going: use as you pay or pay as you use. So that's one area. In India, as a country, our ability to fund the senior living by the retirement corpus 15 years back, if it was at 1, we are at about 12 to 13x today. And that is another story emerging. Now, where technology plays the big role is to manage this massive growth. You may not need just the erstwhile how real estate was played as a local play, but you need the national players, the large institutionalized players who have to run on technology. So one of the investee companies of Aurum PropTech, which is Hello World, is managing a bit shy of about 20,000 beds. You need technology to manage that kind of volume, and that too we are set to grow by at least 5x in next 4 to 5 years. So that's where technology plays one role. The second role, if I only talk about capital per se, and that's homegrown tech over last 2 years we have worked on around the data analytics and data science for reducing the amount of time for evaluating a deal itself. I mean, in India, the evaluation time may be anywhere between 3 months to 9 months, and we see that if we can reduce that by maybe 15 to 30 days, that itself will create a massive amount of efficiency in the system. And then comes monitoring, right, from property management to billing, to recoveries, to management and monitoring of assets. So I think technology and digitization in India, we were quite ahead, but not on the PropTech side. And we are so happy to state that when we started, we are the only listed PropTech play in India.
Why do you say listed prop tech pay? I mean, you have raised money. Why would you say listed?
So, I mean, Integrow per se is not listed, but PropTech, Aurum PropTech, which is the holding company which holds about 49%. And as I said, being part of Aurum is not only capital, but it's a strategic play of integrating the technology and services with capital. So, from that perspective, we act, we work, and we behave like a listed company.
Okay, that was a strategic move for you, right? I mean, you you had to raise that money at the right time. 2019 or 2020 they came in, right?
Yeah, 2021.
2021, pardon me.
Yeah.
And was the reason for you to tie up with them was because the COVID by itself needed you to partner with somebody who had, all one is obviously the capital. The second one is they also had their own internal businesses that you could provide services for through your platform? Or was it also because they come in and would give you the strategic view to take on projects across the world or just in India?
So, one, that it is very strategic. The story started in 2020 when Aurum PropTech was not in existence. It's also one part of the story is, how myself and Mr. Ashish Devra, without whom my story would be sort of incomplete, how we both started. I think that story starts from how we both wanted to think about real estate and lay out a larger plan. And then comes the capital, and then comes this, Aurum PropTech and Integrow. So while the investment happened in 2021, but the larger crafting of the architecture of how service, technology, and capital will come at play had started much before in 2020 itself.
Okay, that answers my question on your approach to things with Aurum, of course. Execution capital, inventory funding are some of the important aspects in the industry. So take me through how a builder works with you. How do you work with them? In services one, technology is one, right? And then funding.
Capital.
Are all three pieces offered as a service, which you alluded to earlier?
Yeah.
Or do you take over an entire project and say, okay, this is how we execute you towards profitability, or this is how we help you towards profitability? How does it work? Give us some examples without naming your clients.
Absolutely. So if we take very simply one of the investments that we have made, all we did was we went and evaluated, took about a month and a half in that process of evaluation. And then comes the play of ecosystem, which is this integrated place. Now, to monitor a investment, typically in real estate, all you do is you appoint third party agencies, right? One to go and monitor the construction, another to go and monitor the financials, another to go and monitor in case you need to have a due diligence over the sales and the receipts. Now we simplified it. So one of the companies or the products, which is the sales CRM, the SaaS, is the sell.do, which is kind of mandated on which the developer has to work on. Now that gives us an access, understanding, and a well anticipated inventory management and the sales management from the developer's perspective. Now it does two things. One, it makes the developer highly planned and very efficient in his process of CRM, where he knows the inventory, where he knows how the inquiries are coming, he knows how the inquiries are being addressed to. And last is the pricing, because there is so much of a transparency in the system that at what price is being sold and at what amount of money is being received. It's just quite transparent, because of the open APIs. Then comes the services, which is another product, which is Crex. Now, all the Crex does it provides a service to the SaaS itself, which means they are the ones who are providing the manpower to go and talk to the customer, right from fulfillment to recovery. So now I don't have to really always have that suspicion in the mind that is my money coming in time? Is my money really going to come? Is there an adjustment? Because these were the vices of this industry, and not necessarily that every vice you address by putting to inspecting organizations, right? You can put technology in, do away with, right? The third one is a very, large, very established broken network platform, which is beyond walls. Now, though we do not push that because that's it's beyond monitoring, but they have the option, and they have chosen the option that we want to use that platform because it has more than 3,500 brokers aggregated on the platform. Their cost goes down by almost more than half, so it's pretty efficient for them, which is again linked with a data science platform. So if you look at, we are not only safeguarding the capital that we are investing, but we are making the developer at least 3 to 4 times more efficient with the least amount of investment.
Basically, you're focused on efficiency. Now, focusing on that efficiency part itself, I like the fact that earlier you told me that you want to pick up developers who are RERA compliant, but also who understand the value of technology.
Absolutely.
Typical mistakes that a builder makes, say they have 100 acres or 200 acres development, or then you have to set up these SCZs. What are the typical mistakes they make? I think they will go ahead and solve the financial piece, but where does that put them on the block in a sense? Where do they mess up? Is it in executing the project, or is it in getting people to absorb, or corporates to come and absorb the properties and whatever is available at that point of time in square feet?
So, I think most of the developers, their planning is good. But when it comes to execution, it's a pretty reactive kind of execution. They would keep on reacting. So if there is a regulatory change which pushes inventory even by a couple of thousand square feet, rather than compromising and still going ahead meeting the timeline, which itself can save much more capital to them, rather than trying to take that little upside. But that's where the first mistake that the developer makes in terms of meeting the timeline, which is the key of making value and return for both the developer as well as the customer, and financer included. The second mistake that I've seen is not maintaining the discipline of execution on one single project. It's like, a Chinese wall. Though there is a contagion between one project not doing versus the other project doing, but there is no system of creating a ring fenced Chinese wall between one project and the other project. In fact,
you're basically saying that moving money.
Absolutely. Either moving money or letting one problem, which may be small or big, go and impact the other project. And this is the second and possibly 70% of the projects. In last 10-15 years, my personal experiences have got stuck because of this.
Absolutely.
And third and the last is, I think between governance, risk, and compliance, the first two words are so alien in this industry that governance and risk management, anyways, it's like a luxury. If one developer comes and says, I've got a CRO, and that state you can see, even from the listed companies' perspective, you ask 10 companies that, do you have a CRO in place? You will get the answer, right? So compliances are there, and there are a lot of established players who are following compliances, but that's not enough. I think the two other words in the GRC, which is the governance and then the risk management. Governance takes care of your planning and every challenge that you may face. Having a blueprint of that, and then having a behavior follow that. That's one issue, but on the other side, you need risk management, right? It's a very risky business to be in. And not having a risk management is like banking. I always say, I think it's a capital management business, and then comes the engineering side, and then comes the branding.
Absolutely. I mean, Ram, that's really well said. How many such projects are you after today? And I know you're a startup in many ways. Tell me what exactly is the deal for India at this point of time? How many projects are you simultaneously handling? Because you bring in technology, data efficiency, and obviously funding, and you're safeguarding your investment by saying, if you follow my processes, you win and I win. How many listen to that? What are the scale of these projects?
Well, Vishal, I think, the need today is that people are listening. And I hope that this listening becomes a practice. But I've seen these cycles. Every time a developer says that, now I'm smart, I learned from my mistakes. And I remember in 2006 and 7, everybody wanted to become pan India. By 2010, everybody burned the finger and they said, we learned the lesson. Now we will be local player. In 2014, there was a massive issue with
Yeah.
residential working capital management. And then people came and said, we learned the lesson. Now we will have commercial and residential as a mix. As we speak today, everybody says we have learned the lesson. We know that the finances are not given. Things may change. Situations may change in terms of who are the participants on the funding side. Now everybody wants to do equity. So this is an ongoing process. But I think every cycle has made this industry one notch better in terms of how they are behaving. And I think we are still not giving enough credit to the regulation called as RERA, and I call it as the SEBI moment of market. When it came in 1993, it looked like, government regulating markets is such a bad idea. How will this market grow? And, volumes will not get built. But today you see, I mean, we are one of the most vibrant stock markets in the country, in the world. I think the same thing. I call RERA as a SEBI moment of real estate, and that impact we'll see over a period of next 10 years, I'm sure.
Such a valid point you made. We make a mistake, we learn from it, we come back to a new mistake. Is it because we're all founder-led companies, even the real estate side, the first, second generation, and it's very promoter-driven. That's what I meant. And even with the PE funds coming in, it's very promoted, right? And is that changing over time? Do you see a new generation, new set of people? The reason I'm not saying that they should not make mistakes. They should make mistakes. But I'm saying in terms of capital efficiency, they could have got better value instead of being heavily burdened or laden with debt. They could perhaps work with people like you and make things better, right? You said they're listening, but where are we? Where are we going? What you said? Will there be new problems, or will they continue to make these mistakes? Because the current theme is now it's equity. Let's go raise more equity and let's figure out. Right? Do you see that changing?
I think, Vishal, if you look at numbers in terms of how this industry has evolved by players, you could have not imagined, the Tatas, the Mahindras, the Godrej, the Adanis way back in 2010. Real estate industry was considered to be the armpit of universe. Today, you have more than 20 corporates very proudly showcasing that they are also in real estate. And I think that itself is a massive mindset shift. And that has already brought in the requisite amount of professionalism. And that these corporate houses don't run specifically with promoters. So that first step is already there. And I think more and more people follow it, even if they are particularly only in real estate. I think that level of professionalism will come, and it has already been seen, and that's what we are seeing. I mean, uh, maybe I'm very conservative with that number of 20 serious large corporate players. There may be more, I think, if we look at.
That's good to know. That means there are some small-time builders who become large and they become proper companies with diversified interests too. Which is interesting that you make that point. What is the case for the small-time builders who have done, say, 20 projects? That I mean, can they do 50 projects? That's the whole thing. Can they go to 100? And how do they do that? Because a lot of the builders of the old days come and say, "RERA has killed me." RERA is something that has not let me go in and explore real estate as a business. Most of them have given up. The smaller builders I'm talking about. But you also have realized that, like a stock market, a stock market's good reckoning is also in the fact that there are a lot of small businesses, small penny stocks that do very well. You see that happening for us in the real estate.
I think in real estate, building scale is a real challenge. And this challenge is faced not only by small developers, but even large corporates. Um, and that also stems from the fact that India is one large country with massive number of local regulations for real estate. So that's one big issue, because that's where largely the value unlocking is happening at the regulatory controls and the local laws. I think that would remain as a challenge for some more time, and that's where technology should play one role. But to answer your question, if I can look at three kinds of developers who will be very successful: developers who are small, boutique, and their scale sustenance, if they keep at maybe 3 to 5 projects, they will consistently develop and deliver boutique properties in every single location that they are working. And they should continue doing that. They'll be very successful, and they'll deliver a lot of value to the customers, to their investors, and for themselves. The second set of uh, developers are the ones who are transitioning between that 5 to 10 or 5 to 15. They are the ones in massive pain currently. They are in the pain because they tried going there. uh, my sense is at least 50%, and I may be wrong if it is less than that, there'll be more, they will be out of business.
Wow, that's a very strong,
Yeah,
and I like that statement. You're basically saying you want to get into this game, focus on the capital efficiency,
absolutely.
and you've got to be a little more serious. So it's not a game for everyone. That's what you're saying.
Absolutely, absolutely.
Okay.
And then the third ones are the developers who are, rather than managing the local portfolios, are trying to manage the portfolio products. So they are managing large projects, different geographies. They will be pretty successful. And I think that is where the corporates are playing big role. That is where couple of large developers have started moving there, and they are investing a lot on their governance and risk. Those are the ones which will be very successful.
Okay. Everybody is now, like you said, in the mind of equity, sticking to that. I meet a lot of people who are going and registering with, they raise a soft commitment of 30, 40 crores, and then they go get a category two fund, registration certificate from SEBI. And then they start doing strata sale, like the old strata sale, but only this time you're not an owner, but but because of the rentals, they manage the rentals, of course. They say that they give you great equity and returns in that, right? It's almost like saying I'm better than FD, but I'm going to guarantee you a rate of return on a year-on-year basis, and the fifth year you can exit or something of that sort. Is that the model that you'd like?
Uh, well, Vishal, it's a very difficult question, and
A
on
lot of
competition.
people are starting that, and you've seen that.
But I'll tell you something, and I'll try and simplify it. There is a regulation in this country, and the regulation simply says that you have a bank which can pool the deposits uh, through a massive regulation from RBI. Then comes, you have the NBFCs, and possibly, let's say, even the AIFs, the alternatives, right? Who are again governed, and there are certain size restrictions that you have to have qualified investors who need to put minimum of 1 crore. And the third one is, you have I would say, in real estate, REITs, but I think we are very far from that place that REITs will become, a household thing, that like what happens in the stock market. Um, but between PMS and collective schemes, I think we have to see and respect the regulation, uh, or cause that regulation comes and helps you. I think finding a innovative, and sometimes in regulators language, cute ways, is not something which is sustainable, neither for these different innovative product companies, or even for the industry. I think if we are really serious about that, we want investment sizes to go to 10 lakh, I think we need to demand a regulation
Absolutely.
and help the
I'm glad you
investors.
brought that in. 10 lakhs is the right number.
Uh,
That's what the starting schemes are, right? So,
right.
absolutely. So,
Right.
why is regulation important there?
I think regulation is important from the perspective that when you are dealing with third party capital as fiduciary, there are two concepts which are very important. One, who's the sponsor of the risk? And second, who's the investment manager or who's the manager of the risk? The moment you create a collective scheme where you are neither the sponsor nor the manager, you are a broker, right? And a broker running capital of different people in through a pool can seriously pose a lot of challenges.
Absolutely. Especially when the said properties don't give you occupancy.
Absolutely.
Rentals are bad.
Absolutely.
Let's move on from there. I like the answer there. I mean, let's look at the three popular rates: Brookfield India Real Estate Trust, Embassy Office Parks REIT, and Mindspace Business Parks. They have over 80% occupancy, and therefore, but why haven't REITs taken off? It really, is that something that Integrow wants to bring in, work with the builders on a REIT kind of perspective, or are we too early? I wrote about REITs in 2005 and 6, and I still can't believe I'm having a conversation whether India will launch more REITs.
So, Vishal, I think we are at that uh, great inflection point where, and you have to understand it from a very capital perspective. A lot of these large foreign institutions have very low cost money which is available, and when they come in this country, all they want is A grade office, and those definitions are pretty straight and simple. More than 75% of MNC tenants, certain floor sizes, and 100 million ticket, right? Now, India just started delivering that size, and you can't see India from that perspective that every single office will be like that. But where things are really changing is the new characteristic which is getting built for the local companies, which are as strong as MNCs. We have more than a century of unicorns now, and they will be the ones who will drive the commercial growth. So I think there is a massive space for individual properties, well managed properties between 200 to 800 crore. And you don't see players there. In fact, it is very unfortunate that you are chasing strata, leaving a whole country's fortune which lies in that the mid segment, right? And I think that is where Integrow is working, and we are very cautious to start with, but we are, and as I always speak about, when we are in real estate, it is not only about one segment, but we are very close to possibly coming up with alternatives in commercial space, and that's the space that we want to really address and possibly take it to private REIT, and then possibly be the first one to create the volume that you wrote about in 2005 and 6 that will happen in India. So we may be 3 or 4 years away from there, but we certainly are walking that path, and I'm sure there will be more competitors who join us in this bandwagon of financializing the real estate in India.
No, that's really well said. I now want to go into different types of properties. Properties like real estate living. Pardon me, not real. I mean, old geriatric care living. Pardon me, that was something I missed. Geriatric care living, and also homes for homes for people who are older, right? I mean, there's one is geriatric care by itself, which has living and healthcare. The other one is just old age living, right? Do you see a combination of investments going in here also? Do you see that as an opportunity?
I think that's a huge opportunity, and from a CAGR perspective, that will be much larger than the commercial or residential. Because in India, the second inning, I call it as a second inning, ability to fund the second innings by self pool of wealth created in India has gone by multifold, and that will create, right now there is a lack of quality
Good
second
products.
inning homes.
Yeah,
But
there's no
I
good
think,
products there.
yeah, absolutely. But I think as the developers realize that there is a monetizable value which can come from there, couple of good cities like Pune, like Coimbatore, Dehradun, Chandigarh, I think this kind of supply is already starting to be coming, and very early stage, but I think this is another space to look for from a growth perspective.
Okay, what about hotels and hospitality? Something that you like? Hotels, hospitality, even hospitals. Even I would put hospitals in healthcare, but they're also like a hospitality business these days.
I not only like, I love that space, but the challenge in India is that hotels have been ego investments, and where you take the cost little proportionately beyond what should be commercially there. So that's one big challenge. The second challenge is that as businesses are now evolving and they are trying to sweat out the investment made in resources. For example, even if you look at the kitchen, right? Your kitchen can be a dry kitchen. I mean, it's something available. But if you hold it only for those 200 rooms, you are not going to sweat out that property. So those are small things. But I think people are realizing the international chains are coming.
Yeah. I see ITC offering, cloud kitchens now. That's good.
Absolutely, absolutely. So I think that's one good space. But to answer, do we really have a lot of properties available? I think the answer is no currently. But as the newer player comes and there is more, rigor about making it as a commercial success, and not only holding a pride property, I think things will change for this.
Okay. What about hospitals, healthcare?
Uh, Frankly, we are far from situation where hospitals can become real estate yielding, product. The reason very simply is that it's a very high specific tech driven, and there are a lot of changes, and the management or operating is very important. I hope there are more hello worlds kind of situation that happen in co-living starts happening on the hospital side. There is scope, but I think we are not there as of now.
Okay. Coming down to prop tech, lot of startups came, lot of startups closed down. People talk tech, you're talking tech. Yes, there is a space for it. A lot of people are building platforms. In the next, say, 3 years, where is prop tech heading? Because I did not see prop tech really become big over the last 10 years, right? What are some of the challenges as an independent entrepreneur? Because you're mostly in the financing side, who's also offering technology, right? I want you to tell me, why has prop tech not taken off? If it takes off, where will it go in the next 5 years? 3 to 5 years.
I think the large issue with PropTech in last 3-4 years has been, one, the adoption. And post COVID, that speed and the velocity of that adoption has completely and dramatically changed. So that's one very big positive. Uh, where the challenges are there, I think PropTech as a bundled offering is a great place to start with. And that's what we are trying to build. Individual PropTech solving one small problem. The problem is that customer acquisition cost and retention itself becomes so high that if you're solving one specific problem, if you try and solve many problems, you are not going to be successful. If you're solving one problem, you have to be part of a collective, and I think that is one challenge if solved. PropTech I see as $100 billion revenue opportunity over a period of next 7 to 10 years, and it's happening. It's in for, the news has started now. We have always looked at industry from a little longer perspective, a 10-year perspective, and we were at a good point to start with. We have the lead, and I hope with our focus on this whole governance architecture as the new feed or new input to scaling businesses will, I'm in my view, will be the real differentiator on how we are scaling the property business.
And I was looking at, reports from abroad, especially from Statista, of the top 10 prop tech companies which have, billion-dollar valuation, and India has only one in the top 20, another one. So it's obviously no broker and Oyo, of course. China has 15.
Absolutely.
Why is that? And now China is going through a real estate bubble. I want you to tell me, when you look at these numbers that I just told you, that 15 in China, only 2 in India, and a couple in the US or something. What is the reason why? Why is this?
In India, I have seen, and this is my personal experience, we start very late, but we really love the velocity with which we grow. I mean, if you look at the number of unicorns, just 3 years back, at 4 or 5, we would be celebrating that, we have so many unicorns. And these days, you do the same number in months, and we are not talking about 30 years back, we are talking about now, So, and that's what has happened, I think COVID, with all, whatever happened was very destructive on one hand, but on the other hand, I think the world changed for a lot of things. How the tech adoption has accelerated is phenomenal. And in this country, we started with fintechs, but proptech is the future in life.
Okay. I have to correct myself on the numbers there. It's of the 15 unicorns globally, 8 are from China, which is basically more than 50% at least.
True.
Still a large number, right? And India can get that. Is it only going to be technology, Ram, or is it going to be in other aspects, a combination of, like you said, funding, in a combination of say SPVs, managing properties, services, and building technology on top of that? Do you plan to be a unicorn, Ram? That's my question.
I think in India, at least, any enterprise currently starts with that unicorn status has become a normal status. So I think startups should start taking pride in saying that, I'm $1 billion, and you will still on the table somewhere at 100th or 150th number. So that's pretty common for us, because now we are seeing the scale in this country, and we are at least respecting that there is a way that scale can be built. But I'll just take you to some very different things which are happening on the background. And what is happening is, we are currently at about 1,500 little plus on per capita income in dollar terms. In China, that $1,500 per capita income to 6,000 happened in 9 years. In India, I think that can happen in 7 to 8 years. But I think what is most important is, at little less than 1,500, we are at triple B minus rating. And if we reach to, the $6,000 per capita income, will be at A rating, which will be 4 notches higher.
Okay.
And I think that does 2 things. One, that changes the entire scape of the multiples that you're getting. And second, that also opens the consumption by almost 5 to 6 times on real estate. If we only follow this one thing, I think all we have to do is not work hard with stupidity to go wrong. We have to just stay the course. We have to be well governed. We have to manage our risks. We have to be nimble, and we can scale. I think we are at an age, we are in a situation in India where scale is pretty given. what we really need to build is the characteristic of governing ourselves. And I think that is where we are focusing. And I'm very sure that, all these numbers we can talk about, but where things have gone wrong. Things have gone wrong in where enterprises have missed. The India story is not missed.
Yeah. The governance and accountability is very important, obviously, transparency. In terms of funding the projects that you do fund, are you equity funding? Are you debt funding? A combination of the two?
So we call it as structured funding rather than either calling as debt or equity, which would mean that we have a mix of equity, mezz, and debt at the stage at which we enter. Because the end use of funds is largely divided either in premiums for land or rehabilitation or investing for incentives, and then going and constructing pre-sales and post-sales. So the post-sales, it becomes a normal credit, which is at a lower cost. And the reason we structure it that way is it certainly reduces the complexity and cost for the developer, because now developers have realized that they cannot have multiple institutions funding the same project, because they are not a financial institution that, in a 3 to 5 year cycle of a project, that they have to have a whole finance department. And that's where we are also trying to add that value, that we would rather structure the capital in a way that it is efficient for them to not invest their effort and intellect in financing and refinancing, but they have to focus on closure of the project and completion of this.
Okay. Ram, have you applied for a Category 1 license, a Cat 2 license with SEBI?
It's category 2
Category 2,
for the
okay.
residential. Yes.
Okay, phenomenal. I also want to know two, three things before we move on to some personal questions. Where to for Integrow for the next 18 months? Where are you guys heading?
Well, we have done the first closure of our first residential fund. 3 months down the line, we are looking at our first maiden commercial fund. We have already got the pipeline on the first co-living fund in the country. And next 18 months, our focus is on strengthening the risk architecture so that we are again rating for the next level of scale. And second is investing largely on technology. And I think we are only at the tip of that, though we are already ahead in terms of competition. But competition is not what we are looking at. We are looking at, what would be that scale sustenance, that apparatus that we need to build from a 10-year perspective. And that's where the game is pretty interesting.
Absolutely. I agree with you on that. The size of the corpus, what is about 400 crores today? And how much?
It will be 500 crore for the residential.
Okay.
Yeah.
How much has been committed, all raised? Are you all in?
So we are at a commitment of about 250 and a lot on the pipeline. So we are looking at closing the residential fund by March of next year. And that would be also time that we'll have two funds getting launched from commercial and co-living.
Okay. Quickly, a little bit about yourself. How did you fall in love with real estate, Ram? And then we'll move on to what the books that you like and things that inspired you in life.
I mean, I can answer this question either being smart or say that, in life, a lot of things happen.
Be honest about it. How did it happen?
Absolutely.
Accidentally? Okay.
So, my first job was in construction. I started my career with Shapurji Palanji. And I would say I was lucky not to choose a consulting job against a contracting company, because I was so fascinated to work with my first boss, who was an IIT, IIM. That was my start. So first couple of years in construction. And then I moved from there to one of the startups in real estate and worked there for about 12 years, starting with about 1 crore of capital, listing it. It was one of the first few real estate companies reaching $1 billion. moved from there after 12 years and joined banking. So where I was a borrower, I became a lender and investor. So I was in banking for about 7 years, managed that as CEO, a large portfolio, exited. Um, and I am now doing asset management. So life has a full circle in real estate. So, I never got really a time and opportunity to choose. I think I was dropped in real estate, and I think that's the destiny. That's how it works. So I'm all about real estate, and it's passion, love, and I think it is just accidentally, things have unfolded for me in the same
Yeah.
industry.
Would you call yourself an accidental entrepreneur who's now in love with what he's doing?
Absolutely.
Okay, we wish you all the best there, but I cannot let you go unless you tell me your favorite books, what inspires you the most, what you hate the most, and then I'll let you go.
Well, I think what inspires me the most, and I love getting up early in the morning. I'm a early riser, and that happened in the life not because I loved getting up early, but my father uh, would be the one that I had to get before him. you know, so that habit continued. I love reading. That's the only sort of meditation that I have. So uh, pretty much reading is what really inspires, instills, creates a lot of confidence for me. That's what I love. Um, from the perspective of books, couple of books which kind of inspired me to this journey. So, there are many books because I read and I keep on reading. That's
What
a
are you
key
reading?
thing.
What are you reading? Tell me what inspired you. Tell me about the books that really inspired you. It need
So
not.
I think, one of the books that inspired me, and I keep on talking and, referring that is Factfulness by Rosling. Um, you know, I believe that in all the ages, currently, this planet is one of the best places to live. We may complain about traffic, we may complain about environmental imbalance, we just keep complaining. But I mean, if you read that book, I love the fact that using data, how he has proven that we are getting better. We are living in the best of the times. I mean, if you leave, even if you take conflicts in account and go back 30 years, 70 years, 100 years, we are living in almost a negligible conflict zone as a planet. So that is one thing that inspires me to think positively. The second book which inspired me to come from a cushy, cozy CEO job to starting my own at the age of 46 is the 0 to 1. I thought it was very difficult to start, and I earnestly
Yeah,
now
it's a lot
realize
of
that it is very
technology.
difficult.
There's a lot of technology, especially in
Absolutely.
the field of real estate. How do you move from 0 to 1 when you know
Right.
that there is land and the structure is built?
True.
So how do you move from 0 to 1 in an industry that's existed like that?
Right.
I agree with what you're saying. It's a good book.
Absolutely.
Well, why did you
So
like it?
So what I like is that, when we look at starting, it all looks so overwhelming. But if we take one step,
Yeah,
have the faith in not just yourself, but also the economy that you are experimenting with. I think this is the best book I can recommend to the entrepreneurs who are on the sidelines. Then age only becomes a
a
matter of
number.
number.
It's just a number.
Absolutely.
Absolutely. What
Absolutely.
do you hate the most in life?
I hate mediocrity, and I can tell you, if someday I have to write a book, I would only write on how to get people, inspire them, excite them. I think in my journey as an entrepreneur, if I have really spent a lot of time, which I thought was the easiest, is building the team. Very
I
proud.
that it's the same problem that all of us have. How do you build a good team? Give me
Absolutely.
the secret, Ram.
Well, I think, and I learned it hard way is you have to keep investing in trust. We invest a lot in saying that, look, take salary, take scale, take ESOPs. I think at the end of the day, I've realized all this doesn't matter. People come if they feel that they are being trusted. And I think if that is one numerical uh, thing that I can develop as a formula, I would really love to do that. And that's what I keep on propagating at the team level with the leaders, that leave the entitlement, keep investing in trust. I have been investing in trust, and I hope that pays off well.
Ram, it's been a fantastic session with you, and I hope to do more. Ladies and gentlemen, this is Ram Yadav, the founder and CEO of Integrow Asset Management, of course. And do check them out. If you're a builder, struggling, you've got all your efficiency ideas in place, and you want to know how you can execute them, get to Integrow. Just call up Ram or just contact me. I'll connect you with him. Ram, thank you so much for being on the Upstream Life. Look forward to seeing you soon.
Thank you. Thank you so much. It was lovely talking to you.